Welcome to the Crop Insurance Podcast. I'm Mike Rydell, a third-generation crop insurance agent here to make federal crop insurance less confusing and more useful. Whether you're a seasoned grower or just getting started, we're here to help you stay covered and confident in every season. Today's episode is brought to you by the Crop West Insurance Group, your agent-friendly crop insurance group. If you want more support, smarter marketing, and better tools to help grow your agency, Crop West's expert team has your back. Visit cropwestinsurance.com to level up today. Crop West Insurance is an equal opportunity provider and employer. Welcome to the Crop Insurance Podcast. I'm your host, Mike Rydell. Today we're having a special edition where we're going to be discussing the One Big Beautiful Bill, or the OBBB, and its impact to federal crop insurance. A few weeks ago, the Federal Crop Insurance Corporation, or the FCIC, had a very important board meeting in Iowa where they discussed the impact that the OBBB will have on the federal crop insurance program. Now, all of these changes that came through in the OBBB are fantastic for farmers and growers and ranchers when it comes to the federal crop insurance program. Lots of great changes that have occurred, and I thought we'd go over them in a little more detail. Now, for the purposes of this podcast, you can still listen to this podcast wherever you find your podcasts devices, whether that be on iTunes or Spotify or whatever system you like to use. But we've also incorporated a lot more video nowadays. And so if you are listening to this, I do encourage you to go check out the video on our YouTube channel, or on Spotify we offer video as well, as we are going to go over some more granular details and look at some tables and graphs to better help explain some of these changes. But overall, they are very positive changes to the program, so I hope you enjoy. So sit back, relax, and enjoy the episode. So as I mentioned, we're going to be discussing the One Big Beautiful Bill amendment that passed on July 4th of this year. Now, going into the meeting, we heard about the changes that were proposed to federal crop insurance, and we kind of had some ideas of what we wanted to learn or what we wanted to get out of it. And those really centered around the subsidy factors that apply to federal crop insurance and some expansion of those and increasing of those. But there's quite a bit of information that came out of that meeting and will be in effect as of the 2026 crop year. Now, for those that aren't necessarily aware, technically the deadline to make changes for the 2026 crop year was June 30th of 2025. Now, the One Big Beautiful Bill amendment was passed on the 4th of July, which took place after that deadline. And so we were really just kind of curious to see which of these changes, if any, will be applied to some of the 2026 crops that have a fall sales closing deadline. You have to hand it to the FCIC and the powers that be that really went to work on behalf of the growers and the users of the federal crop insurance program. And they were able to get a lot accomplished and have these changes go into effect for these fall sales closing crops. So it's a very exciting time in crop insurance. All of these changes are going to be going through effective this new 2026 crop year. Now, I guess the first thing we're going to talk about that came out of this is they expanded the benefits for beginning farmers and ranchers and veteran farmers and ranchers. So that's the BFR and VFR programs. Now, we've done podcast episodes on these exact subjects that go into more detail and give you plenty of examples of how these programs work. So make sure you go back and listen to those to get more information about how this works. Now, the OBBB change that came about is they expanded the BFR and VFR programs from 5 years was the rule. Now it's 10 crop years of active operation. So that makes this available to a lot more producers out there. and really helps them with taking advantage of that program. Now, in the BFR, VFR program, there's just some really key items that help a beginning farmer rancher or a veteran farmer or rancher. But the biggie are the subsidy boosts. Now, again, your federal crop premium is subsidized. So you pay a portion of the premium and the federal government pays another portion of the premium. But now with these subsidy boosts, we can look at how those take effect or what changes those do to the BFR, VFR programs. So for the first 1 to 2 years you're involved in the program, you now get a plus 15% boost or increase in subsidy for those first 1 to 2 years. When you get to year 3, that boost goes to 13%, so it goes down a little bit. When you get to year 4, it goes down to 11%. And then when you get to years 5 through 10, you get a 10% bonus or a 10% bump in your premium subsidy. Now, this is on top of what the subsidy already is. So depending on what your coverage level is, what your options and what program you're in and what crop, you're going to have varying levels of subsidy rates. This is on top of that. Now, here in a little bit, we're going to go over what that looks like so you can actually see in a chart what we're talking about, because it's pretty abstract when you just hear it. But just know that now you're getting even more of a benefit if you're trying to start off as a farmer or you're a veteran returning and you want to start a farm. You now have this 10 years to participate in the program where you're getting a subsidy boost by being a part of this program. So that's fantastic news for the BFR and VFR program. Up next, another big change that came through with the OBBB is under the whole farm revenue protection and microfarm programs. Now, this is another program that we've discussed at length in different episodes, so I encourage you to go back and listen to those whole farm revenue protection and microfarm podcast episodes, as they're fairly complex programs, and we've done a multi-part series on those back a couple seasons ago. And then just a few weeks ago, we had on a whole farm revenue protection expert, Tyson Baker, who came on and we discussed it even further. And so one of the things that Tyson might have mentioned in that episode, but that now is official, is that with the whole farm revenue protection program, the maximum insurable coverage level was at 85%. And now with this change, the maximum insurable coverage level has increased to 90%. So you're now able to insure at 90% of your revenue, which is a huge increase and much needed, and I believe it will be very well received. Now, the premium subsidies for whole farm revenue protection are going to be updated in the actuarials as well, so you're going to want to check those out in your county for your different crops and different coverage levels that you're at. So this is a fantastic change to an already great program that's just going to make it even more effective for producers out there. Now, the next changes that were made were to SCO and ECO. Now, this is another set of programs and area risk coverages that we've also done podcast episodes on and gone into great lengths to discuss what these are. So if you're not familiar with the supplemental coverage option, or SCO or ECO, you want to make sure you go back and listen to those episodes. Now, what changed? Well, you'll remember from the crop year 2024 to crop year 2025, the ECO premium subsidy increased. So we saw a lot more participation in the ECO program from 25 than we did in 24. First of all, because more people are aware of it and more people understood how it works, so they were taking advantage of it, but also because of that premium increase, or that premium subsidy increase, that took effect from the 24 to 25 year, made it more affordable for the farmer. Well, now because of the OBBB for the 2026 crop year, you're going to see a whopping 80% premium subsidy across the board for ECO and SCO. Now, what we're talking about here is the premium subsidy. So what the farmer paid premium, the federal government's going to pick up 80% of the premium, and you're going to be responsible for the rest. Now, this is across the board on ECO and SCO. Now, what's exciting about this is they're already great programs, and they work fantastic if you understand how they work. In the verbiage of the OBBB, SCO is now decoupled from FSA's ARC elections. So if you remember in the past, if you took ARC individual with FSA, you were not eligible to take SCO. You could still take ECO, but you couldn't take SCO. You still need to check your county actuarials to see if it is even available. In places where it is available, you'll be able to take SCO if you take ARC, if it's available in your area. So make sure you check to see if it's available first before you get too excited. But it sounds like you're going to be able to take ECO and SCO regardless of what your FSA elections might be. So you're definitely going to be wanting looking at that with your crop insurance agent at this sales closing deadline that's coming up here soon in the end of September for those fall seeding or those fall sales closing crops. And last but certainly not least, let's talk about the increase in subsidy levels. Now, just a quick review as we've already gone over this, but with ECO, in 2024, the subsidy level was 44%, and then in 2025, it went up to 65%, and now in 2026, it's that whopping 80% subsidy level. So that's a great increase in subsidy, which should translate to a big increase in participation as well. Now with SCO, the subsidy level has been 65% for quite some time, and in 2025 is no exception. It was 65% then. And now in 2026, just like ECO, it is at 80% subsidy level. So again, you're going to see lots more participation in these programs with this high subsidy level. Now moving on, the next one to talk about is just the subsidy levels for your federal crop insurance. And there's so many different programs and so many different crops and unit structures. All of these things change your subsidy level. But let's just pick one to kind of go over it so you get an idea of what's happening with these subsidy levels. So let's look at Montana wheat and revenue protection, and let's check out enterprise units. Now again, unit structure changes your subsidy level, so we're just going to focus on enterprise unit to keep things simple for today. So in 2025, the 50% to the 70% coverage levels had an 80% premium subsidy. When you jumped up to the 75% coverage level, that subsidy fell to 77%. And when you went up to the 80% coverage level, that subsidy fell to 68%. And if you went all the way up to that 85% or that max coverage level with your underlying federal crop insurance policy, that subsidy dropped to 53%. Now, all these subsidies are fantastic and they work well, but for 2026, is you'll be able to see that 80% coverage level now extends all the way to the 75% coverage level. And then when you go to the 80% coverage level on your underlying federal crop insurance policy, you got a little bit of a bump there. That's now at 71%. And at the 85% coverage level, you're now at 56% subsidy. Now, I know that's hard to follow along, but bottom line, when you're looking at 2025 to 2026, that 80% premium subsidy extends from the 50% coverage level up to the 75% coverage level, whereas in the past, it was only up to the 70%. So we had a lot of people that were in the 70% coverage level that might be looking to bump up to that 75 because now there's an 80% premium subsidy versus the 77 in the previous years. Now, if you look at jumping up to the 80% or the 85% coverage level, you're looking at a 3% increase in both of those coverage levels in terms of how much more subsidy you're going to get. Now, 3% might not sound like a lot, but with some of these large producers and these large dollar crops, that's going to add up to a fairly significant amount of premium savings for the farmers. So this is a fantastic move and a great change that's occurred because of the One Big Beautiful Bill and the FCIC getting together to get all of this done and hammered out in time for fall sales closing for the 2026 crop year. Thank you so much for joining us. This has been a special edition of the Crop Insurance Podcast. We hope you learned a lot about the OBBB and its impact on federal crop insurance. Now, if you're listening to us on your favorite podcast streaming service and you have not checked us out on YouTube yet, I encourage you to check us out so that you can see these charts and graphs and different visual aids that will help deepen your understanding of federal crop insurance. Make sure you check us out, as coming up soon, we have Jaime Cortez, a PRF expert, who's going to be coming on as a special guest in our next episode. And if you have pasture, rangeland, or forage, or even if you're in apiculture and you have bee colonies, that's an episode you're not going to want to miss. And the sales closing deadline for that program's coming up soon as well. So make sure you check us out on YouTube, Spotify, Apple Podcasts, wherever you get your favorite podcast episodes. Thank you so much for joining us, and until next time. From my family to yours, thank you for tuning in. If you found this helpful, please subscribe and share with a neighbor. Visit www.cropinsurancepodcast.com for more episodes, articles, and tools. For full policy details, always check the crop insurance provisions or speak with your local crop insurance agent. This institution is an equal opportunity provider and employer.